Chris, I want to kick it off with you, if we may, and get this going. You did just close this acquisition of Alkira, and forgive me if I am mispronouncing. Tell us what's the rationale for this transaction? What does it give you?
Yeah, and you got the pronunciation right. It's really revolutionary in the networking space. If you think about historical enterprise networking, it was point-to-point connectivity. It was very commoditized and, frankly, very clunky and hard to consume. And when you think about an AI-driven world, it's not just about connectivity from your company to the cloud. That's what we would call north-south traffic. It's really now rapidly becoming the need to move traffic and workloads between clouds, or what we would refer to as east-west traffic. That's where the problem exists for enterprise today. And what Alkira brings us day one today is really the marriage of that cloud to cloud, east-west traffic with the company to cloud north-south traffic that Lumen already had. So it's really creating a new category at the right time.
Thanks, Chris, for joining us. I'm curious, could you talk a little bit about how this could impact your outlook as a business? I know that you spoke to investors earlier this year and provided projections for this year. Like, how does Alkira change the business case for you as Lumen?
Yeah, it really changes it tremendously. I mean, for a couple of reasons. When we laid out our financial projections at Investor Day earlier this year, we were planning on building that east-west capability, that cloud-to-cloud capability, which was going to take a couple of years and $200 million to do so. When we saw what Alkira had to offer, which was that and more, we moved very quickly to acquire them because it brings us that capability today. So what we're doing right now is actually just on a meeting before this, is looking at the roadmaps, how quickly sales plays can be developed. And over the course of the balance of this year, we're going to be going hard at how we can accelerate our revenue. Now, a couple of just data points below that. What that means is we're not a telco anymore, right? We are not focusing on the legacy business. We'll have solutions for customers who use voice products, but that is being de-emphasized. The full energy of Lumen is going into the digitization of networking. The second thing is that since closing the deal, where we can get teams in rooms, the early read is that what we've acquired is even more special than we thought. And so we're going to do everything we can to bring value to shareholders as fast as possible.
Your share price is down about 12% since the beginning of the year. What does that tell you? What's behind that drop? And how concerned are you also with investor concerns more broadly about AI frothiness? Do you expect to be hit by that?
Yeah, so I think there's a couple things. We're still valued like a telco that's underperforming. I don't think the market has really looked at the fact or realized the fact that over half of our revenue is in this growth area, and Alkira only supercharges that. So I think with time and education, that fixes itself. As it relates to the AI volatility, there's a lot of talk about a bubble, and candidly, we're just not seeing it. If you go back in time, when the predecessors of Lumen, Level 3, for example, built these big networks, they were building them at the time the internet was coming about, and really that was a solution looking for a problem. This is the exact opposite. The problem is real, where data volumes are exploding. The data is getting further and further away from where companies need to access it. They need to quickly move that data to where workloads can be processed on GPUs. And oh yeah, throw in energy constraints, which only make that more complicated. Am I sending the data to the right place? What we have in Alkira now is the nervous system, if you will, of AI, and that's needed by whoever the winners are going to be. So who the winners and losers are is less important to us. We are deeply ingrained in a lot of the AI infrastructure that exists today, and the capabilities that we now bring to market allow enterprise to in a programmatic way manage their networks, which has never been able to happen before. This is gonna turn networking upside down.
So, Chris, you mentioned AI. When do your AI investments start translating into earnings growth? Because your valuation has rebounded, but your EBITDA is still expected to decline this year.
Yeah, actually, our EBITDA will inflect this year. That's a commitment that we've made to the street. It's not a huge inflection because we are still managing that legacy base, but it will grow from there. And we expected at the time of our Investor Day revenue to inflect in 2028. Again, the work that we're doing right now between now and the end of the year to accelerate that will inform, if we can pull that forward or not. But the early indications are we can. So it's starting to show up. The big builds that we did with the hyperscalers are 20-year agreements. So that revenue is slow to move in. Those projects are on time, well underway, and bring great margin to Lumen. The thing that we're not going to chase is a bunch of new build it and they will come builds, because there's just no return in that. Our focus is really on monetizing the soon to be 58 million fiber miles that we have in the ground from 12 just a few years ago, and really unlocking the network in the cloud, bringing things like firewalls and zero threat and load provisioning in the network fabric itself. So the opportunity here is for enterprise to really have the easy button for network consumption and not have to engage in co-location facilities and firewalls and a whole bunch of complex equipment wired together to make networking work. That's where this goes from here.
Thank you, Chris. Just wondering, you also, of course, closed an acquisition, a sale earlier this year to AT&T. You brought in over $5 billion selling your consumer business to them. You improved your finances quite a bit since then. You restructured debt earlier, but you also at the time axed your dividend. What's your message to investors with regards to the dividend going forward?
Yeah, really the message is this is about growth. And every resource that we have is focused on growth right now. And we see lots of opportunity to invest those funds in an ROIC manner that is very accretive to shareholders. So that's our focus. But again, I want to just touch on what you just said. What allowed us to acquire Alkira and really revolutionize enterprise networking is all of that restructuring, selling non-strategic assets, recapitalizing the company, fixing the maturity curve, going from 3 credit entities to 1, so we have alignment across all of our investor base. It's been an enormous amount of work, and Alkira was really that, as well as the adoption of our network as a service product, are really the first indicators of where we're going, and we're just getting started. So we've moved from defense to offense, and here we go.
Chris, just got about 45 seconds left here. I want to go back to where we started, talking about the closing of Alkira. You also closed the sale of your consumer business to AT&T. So any other deal making to further build out what you call the nervous system of AI? And again, just got about 45 seconds.
Yeah, we've got a lot to work with Alkira already. And again, as I said, we're finding more and more in that. But we will certainly look for things that expand that footprint and keep our lead in place. We'll also look at options around the legacy business and continue to do that. We have been doing it. But as I said, we're de-emphasizing that. We're really focused on the new way of networking.